Let's talk about a moment in history when the entire world economy didn't just stumble, it completely fell off a cliff. This is the story of the Great Crash of 1929. And believe me, it didn't just end a party, it fundamentally reshaped the world we all live in today.
So you have to ask, what on earth went wrong? How did the wild, roaring optimism of the 1920s, a time when it genuinely seemed like anybody could get rich, lead to such an unbelievable catastrophic collapse? Well, let's break it down.
You see, to really get the crash, you have to understand the decade that came before it. The 1920s were this period of just incredible economic growth, and the attitude from the very top all the way down was basically, don't stop the music, let the good times roll. Now, you've probably heard this famous line from President Calvin Coolidge. It's almost always used to paint the 1920s as this time of pure unrestrained greed, an entire era just obsessed with buying, selling, and getting rich. But that's only half the story. Here's the part that everybody seems to forget. In that exact same speech, Coolidge argued that all that wealth, it was just a means to an end. It was for building more schools, expanding our liberties, and widening our culture. He said America was a nation of idealists. So this whole thing wasn't just about greed. It was about raw ambition, a belief in endless possibility that, pretty soon, would spiral completely out of control. And that belief in endless possibility, it found its perfect home in the stock market. Suddenly, the market wasn't just for bankers. It was front-page news. It was a national obsession. You had people from all walks of life, construction workers, waiters, housewives, pouring their life savings into stocks, absolutely convinced it was their one-way ticket to wealth. But a fire like this doesn't just start on its own. It was lit. It was lit by insiders who knew exactly how to play the game and who created this powerful illusion that making money was, well, easy. And our story gets really specific on this date. Let's talk about a stockbroker named Michael Meehan. He and his friends decided they were going to rig the market. And their target? RCA, the hot new radio stock everyone was talking about. Their plan was basically designed to fool the public into thinking the stock was exploding in value all on its own. So here's how they did it. It was actually pretty simple. Meehan's group, known as a pool, just started selling shares of RCA back and forth to each other. With every single trade, they just nudged the price a little bit higher. Now, to anyone watching the stock ticker, it looked like a frenzy of real demand. So what happened? Everyday investors, terrified of missing out, jumped in, driving the price up for real. And then, once the stock was high enough, Meehan's pool dumped all of their shares on the unsuspecting public. Their profit was a mind-blowing $10 million. And schemes like this created the illusion that anyone, absolutely anyone, could get rich on Wall Street. But to pour gasoline on this fire, investors needed one more tool. Okay, let's talk about the financial engine that supercharged this entire boom and made the whole thing incredibly dangerous. Let's talk about buying on margin. The idea was brilliantly simple. You didn't actually need the full price of a stock to buy it. You could put down just a small piece, say 25%, maybe even less, and your broker would lend you the rest. It meant you could control a huge amount of stock with very little of your own money. Just look at this example with that same RCA stock. Okay, so you put down just $25 of your own money. When the price skyrockets to $500, you sell, you pay back your $75 loan, and you walk away with $400 in pure profit. Think about that for a second. A 1,600% return on your investment. With numbers like that, it felt like you literally couldn't lose. Well, here's the catch. Margin was a total double-edged sword. Just as it massively amplified your gains, it did the exact same thing to your losses. If that stock price fell just a little bit, you could be completely wiped out. And even worse, you'd still owe the broker the money you borrowed. Margin was the time bomb, just ticking away at the very heart of the stock market. And in October of 1929, that bomb finally went off. By this point, the market was just totally saturated. The big money had stopped flowing in, and you know what? The professional investors, they were starting to get really nervous.
You know, the crash wasn't just one single event. It was a week-long nightmare. It all kicked off on Wednesday, October 23rd. There was so much selling that the ticker tape fell hours behind, and that sparked a real panic. The next day, Black Thursday, was just pure chaos. But the final knockout blow came on Black Tuesday, October 29th. The market didn't just fall, it completely collapsed. A tidal wave of sell orders just flooded the system, and there was nobody left to buy them.
And this right here is the most important part to understand. It wasn't just people panic selling, it was forced selling. As prices dropped, brokers made margin calls, basically demanding that investors pay back their loans immediately. The only way for people to get that cash was to sell their stock at any price. This created a death spiral. The forced sales pushed prices lower, which triggered more margin calls, which then triggered even more forced sales.
The crash itself was over in just a matter of days, but the consequences, well, they would last for more than a decade.
I mean, this chart says it all, doesn't it? That incredible, breathtaking climb, the dizzying peak, and then the brutal, unforgiving fall. This wasn't just a market correction. It was the end of an entire era of boundless American optimism.
The numbers are just staggering. $40 billion of wealth, gone, vanished. Fortunes that were built over lifetimes disappeared in a matter of hours. But this wasn't just a financial story. The crash was the trigger for the Great Depression. It led to mass unemployment, factories being shuttered, and years of just immense human suffering.
So you see, the story of 1929 is about so much more than just money. It's about idealism, it's about manipulation, and it's about a system that collapsed under its own weight. And that raises a pretty unsettling question for us today. Looking at our own world, have we really learned the lessons of the past?